What's up everybody, Brent here from Mudandmarble Digital. Wanted to drop a little video to you guys to talk about hard money lending. So in today's video we're going to talk about what hard money lending is, how to use it, and how it impacts real estate investing for you. If you're not using hard money lending or you're not sure what it is, this is a great video hopefully for you to get a kickstart into that space and understand why if it's not a tool in your tool belt, it probably should be. So if you're investing in real estate, a common reality that most people run into if you don't get stuck finding a house in the first place is figuring out the next question, which is how the heck are you going to buy it? So if you don't have a giant pile of money that you're going to use to buy the property, then you probably need to figure out some other sources of money to get it going. Now, this isn't a magic pill, this doesn't fix it. You still got to figure out a way to have some skin in the game with these people, but the category of hard money lending is going to be one that I think is going to be key for you if you're thinking about scaling and getting into real estate. So, without further ado, what is hard money lending? Hard money lending is essentially an asset-based lending platform that is not commonly actually rendered by banks. It's more out of like what you would expect from an individual or some kind of company more so. So this isn't going to be some local, bank or like Chase or PNC or any of these big banks. These are going to be institutions that literally are designed to lend money for high-risk applications in real estate. So these are going to be companies that can lend you based on the asset itself, not necessarily on your personal financial position or anything like that. They literally will lend based on the quality, the performance of the asset. So if you're going to flip a house, they will underwrite it. They will do their own due diligence before you buy the property to decide if they believe it would be a good property to purchase, and then they'll fund it accordingly. Why do they do all that? Because if you mess up, they're going to take it back from you and they're going to finish it and flip it. So that's why there's a little bit more cost associated with it, but at the end of the day, you can make a dollar go a lot further in real estate by using them. Let me just share an example of how it works and maybe some terms that we deal with here in Indianapolis. So an example of a lender that we would use here in Indianapolis, the terms that we would get from them is that they would fund 90% of the purchase price and 100% of the rehab on the home. So what that means is they will literally, if it's a $100,000 house, they will lend $90,000 towards the purchase of the home. If the rehab's $45,000, they'll lend all $45,000 on the rehab. So what does that mean for you? That means you've got to come up with $10,000 to purchase the home plus closing costs. So, and origination fees. So there's some things that are tied in on the front side there that you need to be aware of on your costs. But if you've only got $15,000, you might be able to make a deal happen with these folks because you have a way to fund a purchase and begin to pay contractors. Now, they're going to reimburse you through the process, which we can talk about in a later video with scope of work and draw requests, schedules. But for the high picture standpoint, just to think about the fact that you can go into real estate without needing to have the whole $100,000 and the $45,000 to do the whole project. More details around how this works. These loans are typically short-term loans with a balloon. Oftentimes they're up to a year and then they'll be fully due. They also are not ones that you can have to have tenants in place or to do long-term financing with. They also typically have higher interest rates, so they can have origination points. So oftentimes you could have between 1 and 4 origination points on the front side, which is literally a percentage of the total loan amount as a fee. And they also can have interest rates varying from 10 to 18%. So they're pretty hefty on the interest rate side. But remember, if you're doing it well, the interest rates don't really bother you that much because the rate of return that you'll be dealing with from the flip itself and receiving is far beyond that. Thanks for joining me on this video, learning about hard money lending. I hope it was helpful and gave you a few tips and tricks to get into real estate and scale what you're up to. Check out our free download below. Post a comment if you've got questions. We'll be happy to engage with you there. And I hope you guys have a fantastic day and go get more real estate.